All right, let's talk about something really big that's happening in the precious metals space. We're looking at a huge merger between two companies, Contango ORE and Dolly Varden Silver. They're coming together to create this new entity called Contango Silver and Gold, and, it's shaping up to be a pretty unique opportunity for investors. So, let's just get right into it.
You know, if you follow the mining sector, you're always faced with this classic choice, right? Do you go for the safe, stable producer that's already making money, but maybe doesn't have that explosive growth potential? Or do you roll the dice on a high-risk explorer that might find the next big thing, but could also be years away from making a single dime? Well, what if you didn't have to choose? What if you could actually get both of those things in one single company? That's the exact idea behind this entire merger.
So here's the game plan. We'll kick things off by looking at why this combination is just so uncommon. Then we'll dive into the two major pieces, Contango's gold mine that's already pumping out cash, and Dolly Varden's truly legendary silver project. After that, we'll put it all together, look at the valuation, see who's backing this deal, and finally, we'll cover the big catalysts coming up, and of course, the risks you've got to know about.
Right, so first up, what actually makes this deal so different? Well, in the world of junior mining, finding a company that has a producing mine, generating real, actual cash, and a world-class development project with that kind of blue sky potential, it's just incredibly rare. It's almost always one or the other.
And this really lays it out perfectly. On one side, you've got your typical junior miner. All of its value is a promise about the future. It's basically a bet that they'll find something big and then, someday, maybe build a mine. But Contango Silver and Gold is being built as a hybrid. It has real cash flow today, and that is the absolute key. That cash can be used to develop its incredible silver assets for tomorrow. This just completely changes the game because they don't have to constantly go back to the market with their hat in hand, asking investors for more money just to keep the lights on. So let's talk about that cash flow engine. This piece of the puzzle comes from the Contango side of the merger. They've got a 30% stake in the Manh Choh mine up in Alaska, which is already up and running and is operated by a huge gold producer, Kinross. And we are not talking about chump change here. In just the first 9 months of this year, Contango's slice of that mine has spit out $87 million in cash distributions. Now, this isn't some forecast or a future hope. This is real cash that's hitting the company's bank account right now. It provides a rock-solid financial floor for everything else they want to do.
So the big question is, why is this mine so profitable? Well, it all comes down to one word: grade. Manh Choh is running at about 8 grams of gold for every ton of rock. As you can see, the industry average for a similar mine is closer to just 1 gram. That means their rock is 5 to 6 times richer than almost everybody else's. That high grade translates directly into fat profit margins and tons of cash flow.
Okay, that's the cash-flowing gold engine. Now let's flip over to the other side of this merger, which is where things get really exciting. We're talking about Dolly Varden and its Kitsault Valley project. This is in British Columbia's famous Golden Triangle, and believe me, this isn't just any old plot of land. It has a legendary history. I mean, come on, you just don't get a reputation like that for nothing. Back in the day, the historic Dolly Varden mine was producing silver at an absolutely staggering grade, over 1,100 grams per ton. This quote just perfectly sets the stage for the kind of potential we're talking about here. The geology is, well, it's just special.
So what does that look like today? Well, the resource they've already identified is massive. We're talking about a grand total of 64 million ounces of silver and 1 million ounces of gold. And get this, that's before they've even included the results from their enormous 2025 drill program. They're expecting a big resource update next year. This is really the growth part of the story. And speaking of that drill program, the results have been, well, just plain spectacular. Just look at this number. At their Wolfane, they hit 1,422 grams per ton silver over almost 22 meters. To put that in perspective, most big silver mines in the world would be thrilled with 200 or 300 grams. This is just on another planet. But wait, it gets even crazier. Within that same drill hole, there was a 1-meter section that ran an unbelievable 10,700 grams per ton silver. That is over at 10 kilos. That's like 340 ounces of pure silver in a single ton of rock. Numbers like this just scream that this system is incredibly high grade and has massive, massive upside.
Okay, so we've got the cash-flowing gold mine, and we've got the monster high-grade silver project. But there is a third, really critical piece to this whole puzzle that a lot of people seem to be sleeping on. So let's start putting all these assets together and see what this new company might actually be worth.
And here it is. It's Contango's other big asset, the Johnson Tract project, also in Alaska. And this thing is a beast in its own right. A recent study put its net present value, which is just a fancy way of saying its estimated future profit in today's dollars, at $615 million. But here's the kicker. That calculation used a gold price of only $4,000 an ounce. With gold over $5,000 today, that NPV is probably way, way higher. We're talking well north of $750 million. It's a hugely valuable project just hiding there in plain sight.
So let's just stack it all up, right? You start with the foundation, the Manh Choh mine, just printing cash. On top of that, you layer the massive growth potential of Kitsault Valley with its 64 million ounces of silver and those incredible drill hits. And then, as a cherry on top, you add Johnson Tract, a project that on its own could be worth over $750 million.
And right here, this is where the whole investment idea really comes into focus. When you add up all those pieces, the cash flow, the resources, the development projects, the total value seems to be a lot higher than the company's combined market cap of about $1 billion. This suggests there might be a pretty big value gap, where the market just hasn't fully connected the dots yet on what this combined company really represents.
Okay, so if there's this potential value gap, are any of the big, sophisticated investors seeing it? Well, let's take a look at who's already backing this story and the kind of financial foundation this new company is going to have.
Well, when you talk about silver investing, there are a few names bigger than Eric Sprott. The guy's a legend, and he owns about 10% of Dolly Varden. He's not the only one either. Hecla Mining, which is America's biggest silver producer, owns 12%. When you add it all up, more than half the company is held by what you'd call smart money. That's a huge vote of confidence.
The new company is also going to start its life in an incredibly strong financial position. It's looking at having over $100 million in cash with only about $15 million in debt. This is massive. It means they have the money they need to drill aggressively at Kitsault Valley and move Johnson Tract forward without having to dilute their shareholders to raise capital. Basically, they control their own destiny.
And hey, let's not forget about location, location, location. We're talking Alaska and British Columbia. These are what the industry calls Tier 1 jurisdictions. You don't have to lie awake at night worrying about a government suddenly seizing your mine. In today's crazy world, that kind of geopolitical stability is an absolutely crucial advantage.
So we've gone over the assets, the valuation, and the solid foundation. Now for the really important part. What's coming up that could move the needle on the stock? And of course, what are the risks you absolutely have to consider before you do anything? All right, so get your calendar out. The first big date is in February 2026 when shareholders vote on the merger. Assuming that goes through, you've got more drill results on the way, that huge resource update for Kitsault Valley coming later in the year, and then a longer-term mine decision for Johnson Tract. There's a steady pipeline of news flow on the horizon here.
Now we have to be really clear about the risks. No investment is a sure thing. The biggest factor by far is the price of gold and silver. If they fall, this stock is going down too, probably even faster. And while the merger looks good, there's always a chance shareholders could reject it. It's also really important to remember that for all those amazing drill results at Kitsault Valley, it still needs an economic study to prove it can be a profitable mine. And finally, let's be honest, both of these stocks have already had a huge run. A lot of good news might already be baked into the price. So it all boils down to this. You have this incredibly rare combination of immediate cash flow from a high-grade gold mine that's funding the development of a potentially world-class silver district, with another high-return project thrown in as a bonus. It's backed by top investors, it's got a great balance sheet, and it's in safe parts of the world. The question you really have to ask yourself is, at a combined $1 billion valuation, has the market truly understood what happens when all these powerful pieces are finally put together? Of course, this isn't financial advice, but hopefully it gives you a fantastic starting point for your own research. Thanks for watching.